This is Scott Becker with the Becker Business and the Becker Private Equity Podcast. This episode is called The Deal Market, Residential, Commercial, and Development. Here we've got four fantastic panelists. Paula Avenaim, Beard and Warner, but just a tremendous entrepreneur and also real estate leader and broker. She's at Beard and Warner. She's in South Florida. She's in Chicago, and just a tremendous at what she does. Second is Rick Levin, probably the preeminent auctioneer in the country when it comes to real estate. He's the CEO and founder of Rick Levin and Associates. Few people with Rick's talent at what he does. Finally, we've got two brilliant brothers that are leaders of Motew Properties. They've just done a tremendous job of building, developing, and investing in residential real estate and some commercial real estate, but just tremendous leaders in the apartment complex world, the residential world with some mixed use. There we've got Ken Motew and Michael Motew, two fantastic leaders. So again, Paula Avenaim, Rick Levin, Ken Motew, Michael Motew, a brilliant crew, residential, commercial, and development. Thank you for listening to the Becker Business and the Becker Private Equity Podcast. Thank you. I want to introduce our panelists or ask them to introduce themselves. We'll have a broad-ranging discussion around real estate and the real estate world today. We've got great panelists. Let me ask, Paula, can you start? Because you do so many different things in real estate. Take a moment and introduce yourself. Then I'll ask Ken and Michael Motew from Motew Properties to do so, and then Rick Levin. Paula?
Hey everyone, my name is Paula Avenaim, and I live in the North Shore. I live in Highland Park. I have been a realtor in the housing market since 1999. I started off in the mortgage and title industry back then. After college, I worked at the Chicago Mercantile Exchange, went into the fast-paced mortgage business, and then got my real estate license 8 years ago. Best decision I ever made. And I service throughout the North Shore, a lot in Chicago as well. I'm also licensed in Florida, and I'm heavily involved in leadership throughout Illinois, which has been great, a great learning curve just to help me understand the business better in Illinois.
Thank you. Take 1 second, because you live in the residential sector. Ken and Michael live more in the commercial and development sector. Take a second on the residential sector. What does the market look like today? For a little bit, it seemed like not nearly enough inventory, at least in some markets, to sell. What does that look like today? Is that evening out at all? Or what does it look like for a home buyer or home seller today?
Yeah, it's a great question. And it has been pretty much since COVID. It's been really a seller's market on so many different levels. It was just low inventory. People didn't want to show their homes, and for a slew of reasons. And that carried on really until this year, where the market is starting. It's not a buyer's market. It's just not as much of a seller's market as it has been. We're seeing the big shift that I'm seeing is that you're getting 10 offers on the table for every single listing that was coming on the market. True story. And now you're still seeing multiple offers, but before this year, sellers were not negotiating any seller credits. Buyers were offering up to $200,000 above list price. Then they were waiving all of the contingencies per the seller's request when they had multiple offers. The only way you were going to outbid someone else is if you waived having an inspection, waived multiple, pretty much every contingency, even the mortgage contingency. So I'm seeing that shift right now where sellers are actually starting to offer some seller credits. They're looking more at the bigger picture. Buyers are holding back a little bit. They don't want to get into these bidding wars. They're deciding that they'll stay in their rental home or live with their parents a little longer, whatever their situation is, and wait. They're saying they'll wait a little bit longer. If you see the home you love and you can get in it at a reasonable, without going 200 above and not get into these crazy situations, some buyers are thinking they're waiting because the rates are high. That's a whole nother conversation because really historically the rates are not high. So you just need to talk to a really good, have a good realtor, have a good team, talk to your lender. Because the rates really, it was just an very unusual situation. Of course, having the pandemic, right? Probably, hopefully, God forbid, never see that in our lifetime again. But that created this whole ripple effect, because they needed to boost the economy, and we were in a crisis. If we ever see the rates at that low again, that means we have a real bad situation in our hands, and it's just not happening unless again.
No, thank you so much. And you do see some of that market evening out just a little bit,
Yes.
where it's been such a seller's market. And one of the challenges with the seller's market, somebody sells their house and then they don't know where to go, quite frankly. You see that challenge in such a seller's market too.
That's true.
Kenny and Michael, tell us a little bit about what you do in the history of Motew Properties.
Hi, Ken Motew. Michael can butt in any time as well.
I will.
Michael and I started Motew Properties 16 years ago. We own and manage about 100 buildings in the city of Chicago, all north side, all rentals. We don't condo, we don't sell. We very rarely sell what we own. And we do adaptive reuse, and we do existing buildings that we rehab. Every one of our buildings we buy, we gut, and then rent them.
And we do ground up development.
Yeah, and we do, correct.
Although that's relatively new for us.
And what are you seeing in that rental market today? Rents have been going up so much the last several years. Are they still going up like that? And what do you see in the development market? I mean, we see in some of the areas that we live in or see these significant condo or rental buildings going up, not nearly enough, but we see some of them. But what do you see out there in the rental market as well as the investment market?
There's very little supply. I mean, look, you want rental pricing to come down, build more buildings, and it's very difficult. The city of Chicago is not an easy place to build. We're fortunate we understand it, but it's still very difficult for us. And
I think it's also worth noting, like we in Chicago, it's true you don't see a lot of cranes in the sky, and I think sort of the conversations around the Chicago real estate market and our asset class are like you have these other developing states that are in the Sun Belt that overbuild and are stuck with supply, and now they have too much supply and not enough demand. Chicago does not have enough supply, has a high demand.
We're 26,000 units probably under supplied.
Now I will say they don't report as much about for Kenny and I, if we're doing ground up, which we're doing more of, we're talking like 5-story buildings. So these aren't even mid-rises. They're smaller size buildings between 30 and 50 units, 30 and 60 units. And actually, I mean, we know quite a few developers that are building these type of projects. And, I think clearly the Chicago rental market is probably the best rental market I've ever seen. And Kenny can go through the stats because he likes them a lot, but it's not just, it's tenant retention and then like new product inflation, we'll call it, or increase in rents, and both of those are at the highest level we've ever seen. Our retention's the highest it's ever seen. Our renewal rates are higher than we've ever seen, and our new rentals are at a rental rate that it's the highest we've ever seen, and have gone up year over year.
The last 3 years, Michael, let's talk numbers just to give people if they think it's relevant. I mean, you're looking at people who stay with us. We project maybe 2, maybe 3% increases. We've averaged, we have 68% retention this year, with an average person staying at over 5%. And when we have to renew the lease or get a new tenant, it's over 8%. And those are numbers that we struggle to keep up with. Michael and I used to pride ourselves in saying, "Oh, we know what every unit rents for." I think it's gotten to a point where we're trying to catch up. Our goal also isn't to price our tenants out of the market. But the reality of it is, you can't go move. If we raise you 5%, you can't go find a similar apartment for the same rent in the city.
How important is the location of the building, the location of the property, or do they rent well in neighborhoods that aren't as nice too, but just at different rent levels? How important is location still in the rental market?
Well, I would say that, again, our experiences and my brother and I have historically, all of our properties are located in kind of these premier north side locations. So let's just say from Lincoln Square to
The West Loop.
to Old Town to West Loop. We go into Humboldt, Logan. I mean, certainly the demand in those areas has remained very steady, if not increased. And so I don't want to like talk out of turn. I don't know some of the other areas. I suspect that those are also renting. I believe the rental rates are lower. And I think it's important, like Kenny said, what we're finding is that if you're renting with us right now and you wanted to go get a similar place in a different location, maybe an equal location, you're not going to find, you're going to be paying more rent in addition to moving costs. And so we find that people aren't leaving.
I'm going to ask you a question about family pride. One of the brothers is a physician leader. Does that get less or more credibility around the parents and family than being real estate developers and owners of real estate? Where does that fit in, and how does that
Steve
go?
was a pride and joy. Steve was a pride and joy.
Okay, and I don't want to bring down the mood of the whole panel, but both our parents are deceased.
Yeah.
But I will say that I think growing up
was a doctor.
Like, my father was a doctor, so he was always like, we were just, you
were the real estate guys.
Yeah, I mean, like we were.
It's hilarious.
It wasn't very impressive.
Well, as good a guy as they come, your brother as well. So I just was curious as to how that all went, as you guys ended up in real estate and doing tremendously well. And is he ever jealous of your guys' success, or is he okay?
He does very well, and
I think when he was a surgeon and practicing surgery, he might have been a little bit, but I think he's gotten very involved and excited about hospital administration, which puts me to sleep. So I don't get it, I think, and now he participates in our deals now, so I think he gets a little bit of excitement through that.
A little bit of both. And Rick, you've had this fascinating career. You carved out this incredible niche in the real estate business. Talk about what you do and how you got started in it, and maybe a couple of the interesting things that you've dealt with in real estate.
Sure. Thanks, Scott. And for 38 years, I've been in the real estate and personal property auction business all around the country and a little bit outside the country. And the clients have been wealthy people and people with financial problems and the heirs of people that have passed away, and Bank of America and Chase and the FDIC and the U.S. Army. Obviously, in Chicago, one of the sales that we did years ago that got a lot of publicity was for the U.S. Postal Service. We auctioned the big old former main Chicago post office that the Eisenhower Expressway goes underneath. But all kinds of sellers find auctions beneficial. Sometimes it's because of the urgency, the time, the relative speed in which a sale might happen. Courts love auctions, for example, but so do divorcing couples, candidly, when the reason that the marriage had a problem was because of the house. And it's a good way to get rid of the house and figure out what it's worth. So it's been very valuable, especially when the asset is hard to value.
What are the most interesting auctions you see today? And what does somebody need an auction? I know during 2008, 2009, when there was the real estate crisis or the Great Recession, you were like so incredibly busy. You stayed busy all the way through. Do you do better in bad markets, good markets? I mean, you seem quite busy. What does that look like for you as an auctioneer? When do people come to you to auction off a property?
Well, it's funny you ask. If we were selling Monets and Van Goghs, or if you're the Merck or the Board of Trade or the New York Stock Exchange or the U.S. government refinancing the national debt every week at a treasury auction, auctions are the normal way that many businesses determine value and find value. But in real estate, the irony is that since the Depression in the 1930s, real estate auctions have somewhat gotten a bad reputation. So to that end, in that 2007, 8, 9 period, when real estate values were falling, which hasn't really happened in most of our lifetime, places like Las Vegas, homes were going down 10% a month in sometime in that 2007, 2008 period. So sellers like Fannie Mae and Wells Fargo and GMAC Bank, now called Ally Bank, were calling us and saying, please auction these properties. We were running to Vegas and Detroit, which had a precipitous drop. The urgency there was they had to move the inventory because they were getting so much inventory coming in, they just couldn't handle it. However, these are relatively good times. It is a seller's market, as Paula was pointing out, and it's all about supply and demand. And right now, the supply is low in residential in most markets, which would be an excellent time for sellers to do an auction. But many sellers really can't get their arms around the fact of doing an auction. And because the stock market's at an all-time high, and they feel that their home is maybe going up 1% a month, 12% a year, they don't really feel the urgency. And of course, what you talked about is very real. Many people got locked into mortgages at 2.65%, 3% interest, and they're looking at rates today at 6.5. So people don't want to talk about it, but they're kind of prisoners to their home. They live in affluent areas all over this country. They look like millionaires. Maybe they are millionaires, but the reality is they're kind of prisoners because it's 6.5% interest on a new home, and they're paying 3% now. They're sticking around. They're not moving.
On a $1 million house, it's $30,000 a year. On a $2 million house, it's $60,000 a year. Just to move costs you that just to start with. Paul, what are some of the most interesting issues that you're looking at in real estate right now? What do you see as some of the most interesting issues that you see?
Exactly what Rick was saying, to his point that a lot of people refinanced during the COVID time period, or they purchased and then they bought, it was at 2.5%, 3%, and they want to sell and they can't because where are they going to go? Or they can't even refinance, for sure, that's out. So where are they going to go and find somewhere else where they're going to pay 2.5%? The rental prices right now are really high. So it is like a catch-22. It's a little bit of a struggle. The wealthier people can seem to manage it because, or not even, middle class, because maybe they have some funds saved up if it's worth it. They want to be closer to their grandchildren. So they're going to make the move. They're going to bite the bullet. They're going to take that hit. And that's okay for them, but it's not okay for, let's talk about the Gen Z market, the younger kids that are doing everything right. They're working hard. They're working hard. They have jobs, they're saving money, and they're trying to buy, and they just are kind of chasing this ideal of home ownership and that American dream, if you will. And I know that I have 3 Gen Zs kids, and they're, my oldest one, who's 27, lives in Lincoln Park, has to keep renting because to put down 20% or to get into a bidding war, right? And you want to pay more than what it's worth. He's got to get a loan. It's not going to appraise out. So the person who has the mortgage, who doesn't have the mortgage, who has the cash, is willing to, who cares? They don't have that appraisal issue. So there's some things at hand. It's not all doom and gloom, I promise.
But take a second, because we see again more transactions again getting done. It seemed like a few months ago it was really soft in the North Shore in this area, just because there's not enough houses to buy. And exactly what you talked about, yeah. 10 bids on a house, and the parents show up and help the kid who's got, the parents who have money, they backstop the kid, and then the kid's got a whole different game compared to other people that they're competing against. But talk about the Florida market. What do you see in the Florida market? Because you also spend time helping buyers and sellers there. For a while, that seemed to be just on fire. Is that still on fire? Is that softened? There's been so much building there. What do you see there?
So the Florida market has softened for sure. And this year, we saw a lot of price reductions where that wasn't the case before. It was, again, this whole frenzy. People were coming to Florida, moving to Florida from, the Midwest, New York, and the whole COVID issue, post-COVID issue too. And then now it is the construction, they're still building a lot, but there's also a different issue in Florida because of this there's a lot of HOAs there. And there was this issue with the HOA when the building collapsed in Miami. And then there's this whole reevaluation and reassessment now, and all these special assessments coming up. So Florida has a whole different problem on its hands in terms of that. It has slowed down. The prices are lots and lots of price reductions. I mean, there, homes selling for $75 million, which was like the norm truly 2 years ago, are now, they're at 50,000, or I'm sorry, 50 million, not 50,000, 50 million, or, and then your normal bracket, you're in like, the millions, but it's a different market there than here for sure. It's wild. It's like the wild, wild west in Florida. But
and you are seeing, though, more and more what people call price improvements. We call them price reductions, but people call it price improvements in the marketing and stuff like that. Yeah. Kenny and Michael, the sort of movement towards, there's a question from the audience about the change in workforce, how workforce is less focused on the big office buildings in the central cities. Does that make a difference in your business, in your locations? Like at one time, some of these buildings built near North, River North, were built in part to help accommodate people that would be living and going to work in big buildings in the Loop. Any changes that you see because of how the workforce now works, remote and hybrid and so forth? I see Dylan Warner's joined us, one of our sponsors, great leader. Dylan, we'll ask you to go off camera for a few minutes and we'll be back with you on the next panel. Thank you so much, Dylan. Kenny and Michael, any thoughts on sort of workforce redistribution and what it means for the rental market?
Well, I mean, what we're finding is, and Michael can speak as well, I mean, you're talking about people working from home instead of going down into work in the Loop. I mean, that is
and just office product has changed, obviously.
Yeah, there's
people are moving out of big office buildings into smaller size neighborhood buildings.
But go ahead, Michael.
Well, I think we've seen, yes, there's been a lot of change. I think one of them that comes to mind right away is that we're actually buying some of these smaller office buildings and converting them into residential properties in areas like River North, for example, which is happening, like everywhere in River North. I think Cranes or someone just posted an article about it the other day. And so not only are we seeing that some of these, that people aren't working in the Loop, they're converting everything in the Loop to residential. And I think from sort of on a more granular level, we're designing apartments today when we rehab properties to accommodate people who don't go into the office. And so, when we're designing buildings, we realize that, we have this joke in our business. When we walk through a building, for whatever reason, we have to bring someone through it, insurance, appraisal, everyone's always home. I mean, I think I can speak for most of us. I mean, I was never, I'm still never home. I mean, I like to get my office. Really, when we're showing everyone's home, we have to, and then of course there's you have to give them 48 hours notice, and nobody wants you in their apartment because that's become not just their home, but it's become their workplace. And so, I think there's been a big change, and I would say,
it also changes how we develop property on our business. It also changes how we develop property. If you think about it, people are home all the time. I mean, they're in their building and in their unit. So we're now looking at adding amenities that we would never probably have done in smaller 36-unit buildings. We're talking about adding rooftop decks or gyms in the basement or co-working spaces in the basement, stuff that we would never have done 20 years ago.
Well, and if I might, Ken and Michael, I'm sure this amenity everybody wants, a package room. Because everybody gets their Amazon packages. You need a secure package room. And I know Paula wants to say something, but Scott, I think your listeners will get a real kick out of another asset class, which I see about to change in a big way, are parking garages. As you know, I spent a lot of time in California, and Los Angeles, and San Francisco. You look to your left, you look to your right, there is no one driving the automobiles that are driving next to you. So when you look at all the parking garages, especially in the central business districts of this country, I feel that those cars won't need to park in the garage because your car will let you off. It won't go park. It'll go out and make you money by picking up other people during the day if you so wanted to. And the parking garages and the apartment buildings themselves that have garages inside were not built to hold the electric cars, which weigh 3 times more than the internal combustion engine cars. So there's going to be a lot of central business district real estate that's going to have to be well thought of. And even though Michael and Ken are doing it, a lot of the floor plates in the office buildings just don't lend themselves to conversion to residential. And therefore, like we used to see in Las Vegas when the old casino would get knocked down, some of these nice looking office buildings around the country are probably going to have to be torn down.
Yeah.
Crazy.
So true.
Just crazy.
Yeah.
Rick, thank you. Paul, you were going to say something. You're going to add something.
I was going to say, I think you guys, Rick and Michael and Ken, you guys should open up a couple of cafes around Lincoln Park because, again, I have 3 Gen Zers and these kids are a lot of kids, not all of them, of course, but are in tech. And in tech, you're working from home mostly. 70% of these kids are. My oldest son is always at the cafe. He says it's all cafe. Everybody's working there. They have their computers. They're able to tune out, or they have their earbuds on, and they're just working. And they're doing data analytics online, and they're really working and they're really focused. But it is different. And my other son, who's in imagery and different, he has to go to the hospital. But that's a whole, it's a different. It's not the tech. It's tech, but different. Where he has to be in person. But a lot of these kids graduated with computer science degrees or econ and such, and they love it. I mean, my son's perfectly happy going to the cafe every day and working for 5 hours.
But Paula, aren't we concerned that when these kids graduated with computer science degrees and they were told to go into coding about 10 years ago, aren't they all going to be unemployed? But thank goodness they'll all have guaranteed income from the government. Isn't that the future?
Let me ask a different question before we get into a whole different discussion down that route. But let me ask you this question. I'll ask Rick, Kenny, Michael, Paula this. The most interesting thing you're watching in real estate right now, and Kenny and Michael, I'll start with you. Rick had mentioned what's going to happen to these big parking lots, what's going to happen to these big commercial buildings, big office buildings, some of which can't be converted to residential, and some of them still have pretty good vacancy rates, some don't. But Kenny, Michael, the most interesting thing you're watching in real estate right now, and then Paul will ask you the same thing, and Rick, you too. Kenny and Michael.
Interesting thing I'm seeing in real estate.
I mean, I think the adaptive reuse from office to resi is one of the most interesting things I'm seeing, because it's not Kenny and I always say, we're never the first ones in, we're never the last ones in, but we get in relatively early. But as I'm looking at that space now, we just came, our afternoon has been insane because it always is, but we during your panel, we ran to go look at an adaptive reuse building in Fulton Market. And it's a beautiful office building, 7 stories, timber loft office. And it's essentially 50% vacant. I mean, Kenny was walking through this one office that was 100% vacant, had the nicest desks, 1,000 chairs, and nobody was in there. And it's to me, that's kind of the most interesting thing that I've seen, because people are always building ground up. People are always taking these neighborhood walk-ups and rehabbing them, and that's been going on for the 30 years we've been in business.
What I think interesting, and I'm in the minority, I think people are looking at renting as more of an asset than buying. You said it's hard to buy. The barrier to entry into owning real estate is extremely difficult, and there's nothing wrong with renting. It gives you you don't have to fix anything. You can move when you want, and I really do believe that that's become more of an asset and not looked, you don't own. No, I think renting actually opens a lot of doors. And I think
I couldn't agree more with you, Kenny. There's a whole generation of people to be renting versus buying just because it gives them flexibility. They're paying maybe a premium a little bit, but not even as much anymore for that rent versus ownership, but they don't have all the risk of holding the property.
Not to mention, Scott, that they can move to a different state and work remotely. Right. So they're not down to a mortgage, to having to sell a home.
30 seconds on the cost of adaptive reuse, adapting, some of these, some are impossible, some are doable. How big a challenge is the cost, or is that every building's different in terms of the ability to change it to residential?
We can speak directly to that, and Michael and I can. We are doing a building right now that, let's say, we figured to be at 165 a foot. We'll be lucky if we get it done for 200 a foot now. So I'm the divide between building new and these adaptive reuses is getting smaller and smaller, which is why Mike and I have started to look at building ground up construction. That's what we're
smaller size. I think we would, if anyone asked us today, we would say without question, if somebody could find us land in a well-located area, we would rather build a 5-story, 50-unit building than rehab than an adaptive reuse 50-unit project.
God, just because so many different complications.
Yeah,
Paula, let me turn to you. I got to wrap up this panel shortly. Paula, the most interesting thing that you're seeing currently.
Just that the market is starting to equalize a little bit, which is great. I love that because, and to what they were saying too, is that talking to some of these younger folks or just people who are renting, they're not seeing it as a loss really. If you talk to somebody 5 years ago, they're seeing it as right. The flexibility, it gives them flexibility, it gives them options. They're not locked into something, so they're turning it around and looking at the positive. Because they don't really have a choice, to be honest. And so, and the rents aren't as high as they were too. So it's interesting. I think, by these office buildings can be converted into multi-use also, which is good. It seems like a lot of the Gen Zs are really looking for, they want everything to be easy. They want it right there. So if you can build, a coffee shop with this shop with that and have a few residentials above, you're in good shape.
Fascinating. I know that in the building downtown that one of the kids lives in, it's exactly that. They've got the goddess in the grocery on the first floor.
I love
They've
it.
got the building
And they'll pay
like
premium for that, no problem, because everybody they like the easiness of it.
And the amenities.
And
Rick, you're in a lot of different markets. You see a lot of different markets. 30 seconds on the most interesting thing you're watching right now.
Well, the most interesting thing I'm looking at is data centers. And to that end is how we're going to get the power to power all these data centers and the need for water. And a lot of municipalities don't want it. And that directly affects, Scott, our 401k and our IRA, because a lot of our high-flying stocks require these data centers. And a lot of these municipalities are saying, not in our town, don't build it. So really the energy infrastructure, we all take it for granted, but I believe it's everything. And it's going to be such a political fight. And is our electrical rates going to go up? And
we watched this
really
years ago with the phasing blackouts in California for a period of time, and that's something our country is not used to and does not like. People don't like that, not having their energy when they want to have it. Fascinating. Kenny and Michael, I want to thank the both of you, Rick, Levin as well, and Paula. Always fantastic to visit with you, the best in the business. Paula, thank you so much. Thank you, folks.
Thank
You guys
very much for having us.
Thank you, Scott.
Paula and Rick.
Always a lot of fun. Thank you for listening to the Becker Business and the Becker Private Equity Business Leadership Summit. Again, thank you to each of our sponsors, McGuire Woods, Perpetuate Capital, ThinkSpan, Priority Search Management, Range Park Partners, Baird & Warner, and Elevate Talent Advisors. Thank you very much.